Good morning, everybody. Welcome back. I'm Craig Berger, Technology Sector Head at Hedgeye Risk Management and Semiconductor Analyst. Wanted to fill you in on something we're seeing this morning out of EasyChip, ticker EZCH. EasyChip did pre-announce lower third quarter revenues due to demand softness and inventory adjustments at networking carriers. This is sort of the next domino to fall. We've seen a couple pre-announcements out of the set-top box space about a month ago with MaxLinear and Entropic. Now another small firm in EasyChip and a different sector. And so we've talked about how the chip sector is a bit frothy. On the one hand, you have pretty decent global demand trends and a lot more electronic content per device. And on the other hand, you have seen the sector sort of overship end demand and consumption and display some of these frothy metrics. So we do still see a few other areas that pose risk. So as we noted, cable set-top box, you saw a couple small players already pre-announce. We would note that Broadcom, BRCM, and STMicro, STM, are the two other chip firms most exposed to this area. A second area where we see some frothy risks is in the data center. There is legitimate demand in the data center space, but we still feel like shipments could be ahead of end consumption. We saw Broadcom, for example, ship first half 14 revenues up 40% on a year-over-year basis. While the company's still having strength with their Trident II chip into the data center, we think 40% year-over-year for the whole first half of the year is too much good news. In the data center, firms that are most exposed here include Intel, Broadcom, Cavium, PMC Sierra, QLogic, and Emulex, among others. The third area where we see some weakness or frothiness potential is in the carrier networking and China 4G space. Just like EasyChip mentioned today, we also had Xilinx pre-announce lower third quarter revenues back in late July. It was a 4-point revenue adjustment versus street estimates, which led to a 15-point down move in the stock. But again, China 4G and carrier networking shipments have been very strong, and thus you see some risk for chip firms most exposed here, including Altera, Xilinx, Cavium, EasyChip, Broadcom, Applied Microcircuits, Marvell, and others. The fourth and final area where we see some shipments above end consumption is in the corporate PC space. Intel's been doing well. There's been a corporate PC refresh, driven really by aging installed base of PCs, as well as the end of support for Windows XP. But we know that Intel shipped client PC units up 9% on a year-over-year basis in Q2. We think end consumption is about flat year-over-year in PC. So a 9-point gap between Intel's year-over-year shipments and end consumption. That does lead us to conclude there's some frothiness in client PCs. Intel, AMD, Marvell, and Avago are the most exposed here. That's a little bit of a rundown on what we see going on in the chip space today. If you have any questions, reach out to me on Twitter at HedgeyeBerger. Thanks so much. Have a great day.